Hi, so I'm here today with Norman Bocci, who is one of our favorite lenders. We've been working with him for years. He's been in the business a long time, super knowledgeable about the lending process and different issues to look out for before going under contract even. So he's great to get pre-qualified with and walk you through the process. So last week Norman was telling our team about some of the issues that are happening with forbearance. So Norman, why don't you
All right,
fill us in?
just to give you a little background on what forbearance is, when you get in a tight spot, it's always been available. The lender has to offer you some kind of forbearance, but in the past, you really had to document your hardship. With the SAFE Act that went into effect in March, the CARE Act that went into effect in March, you're now allowed just to request it due to COVID. 3 months up to a year. Each 3 months, you have to request an extra stay. So long as you communicate with your lender, they'll let you put those payments in forbearance. The problem with that, and we all saw when this first came out, was they didn't have anything in the effect of what happens when you come out of forbearance. Your only option was either to pay those payments back or spread it over 12 months or go into loss mitigation where you basically take a nick to your credit because you couldn't make your note and you wouldn't be able to buy again for a while. In July, they announced Fannie and Freddie and FHA jumped on board that they'll allow you to defer those payments to the end of the loan. So it's just an extra, all those payments just get put in the back. So it's kind of like a little stimulus package for the economy because people weren't making their payments for 3, 6, some people have been 9 months, going on 12, and some more might jump onto this forbearance thing. One of the problems that we've been seeing in the industry is not all servicers are telling you your true options, or they're going to tell you your options in the order they think is best for them. The first option, of course, is bring your payments due. If you were in forbearance, you probably don't have 6 months of payments laying around. The other option is they're going to stretch those 6 months of payments over a 12-month period. That's rough too. Now you're making your regular mortgage payment another half. It's difficult. The last one is the deferment. Put it at the end of the loan, which is the best option for the economy and most individuals. Some lenders aren't even offering it at all, and you got to be careful with that. There's a really good website that you could go to that kind of answers all these questions and if you actually qualify, because your loan does have to be owned and backed by Fannie and Freddie or FHA. Who you make your payment to is your servicer. Who owns your loan is somebody else. There's lookup tools on a website. It's called forbearancereport.org. That's a
We'll
really
include that.
forbearancereport.org is a really good website. It has frequently asked questions that will probably pertain to your situation. It has a Fannie and Freddie tool lookup to see who actually owns your loan. It just puts in your basic information and it tracks down who owns that loan on that property. The problem we have when you're in forbearance, you're not able to make your payment. So right now we have temporary overlays guidance. If you're in forbearance, you need to bring all your payments current to be able to buy again or refinance again. You cannot do a refinance to bring your payments current. So that's a little bit of drawback when you're in forbearance. When you come out of forbearance and you go into, say, a loss mitigation, they have temporary overlays that once you make your 3 payments in a row on the loss mitigation, you can go ahead and buy or refinance, but they have to do the 3 payments on time. The problem that you have with loss mitigation in general, it's derogatory on your credit, so it's going to bring your credit score down regardless.
Okay.
So that's the problem that we see with that.
So a lot of people don't realize that your lender and your servicer are 2 different entities. So that's where a lot of these issues are coming up. So are you seeing any problems with refinances or new purchases with those that have started forbearance? What are we?
Well, there's waiting periods involved with the forbearance. It's different for each scenario. Just for one thing, your servicer is who you make your payments to. Your lender is the person that originated your loan. The person that owns and backs your loan is probably somebody else. So there's actually three entities.
Okay.
And most commercial loans are backed by Fannie and Freddie. I'd say 70% of them are. You do have private banks that hold portfolio loans. You have your non-QM loans and your VA loans as well, FHA.
So it's super important. We've learned to work with someone with a lot of experience. So thank you, Norman. They can see a lot of problems before you even go under contract or try to refinance and steer you in the right direction. So thank you, Norman.
Thanks so much. Thanks for having me.